Hello and welcome to the first video here on my YouTube channel. I am Futures Trader from the Easy Algo Discord community. And as a disclaimer, I just want to say that I'm not a trainer or a mentor or anything like that. I'm just another member that's paid for access to Easy Algo trading indicators. So I want to share this strategy that I use for swing trades, long-term trades. And I've tried to share it like in the chat in the Discord channels, but it's just too much to type and explain, and it's just better to make a video and show it because it's kind of hard to explain. It's kind of complex, but I'll try to make the video as short as possible in order to kind of, just keep this video on point. So what you're seeing here is a divergence of the money flow, and I'm sure most of you know this. The money flow is this line that goes up and down, the 50 line in the middle on TDIX, and I got my edge of my money flow highlighted with like a yellow color, so it's easy to see. And this yellow line is also referred to as the middle band when you do your alerts. And so what I'm finding is whenever you have the price coming down and the money flow going up, and this is consistent and so many things, when you have that, you're getting ready to have a big move. It's often a bottom signal is what it is, and it gives you a very precise entry. There's no denying that this works. I use it. Sometimes you'll have little deviations outside, when there's big dips and stuff. So like this kind of thing here will happen. But when I show you more examples, you'll be like, wow, this is consistent. So a lot of people think that you need to wait for this middle band to cross the 50 line on TDIX right here. But if you wait till this point, it's too late. So what you're really wanting to find is when this fast MA, the white line, crosses the middle band. That is your trigger, really. And sometimes, you get signals right before that. And I'll show you a lot of scenarios to kind of prove this. And it's consistent. This happened right here at a local bottom, and there was a massive move. And you'll see this on all time frames. And it's very common. I've got my colors set to pop so I can see this because of the fact that your divergences are only going to paint for the fast MA. But so for the money flow, it doesn't tell you that there's a divergence there. You just have to see it for yourself, So yeah, this is just one coin, and I'm going to go through and just look at a bunch of random ones. And you'll see this consistently. You want to look for it on the 4 hour and above. Even though you can find it on any time frame, you're really going to catch a trend change and a bottom when you look at the 4 hour and above. I mean, sometimes though on the 1 hour you'll even get it. But basically, this is what it is. You got your price coming down. You got your your money flow going up, and then right here is obviously, once again, this is another coin, so I'm showing you that this is so consistent on different coins. It's not just a random thing that happened on one coin. Look in the charts and back test yourself, and you'll see this is true. So right when it has the final crossover, you're getting ready for a massive move, and it's a long-term move. This is a great way to enter trades, like for a swing trade. Like this was a big move. And so I'll show you more scenarios with it, and I'll explain some things as I go. So one thing you want to keep in mind, I'm using some moving averages. All you really need is some sort of moving average ribbon, and you need your TDIX. So I happen to be using the 8 SMA, my white line, and the 20 SMA my green, the 50 my blue, the 200 my red. So that's the moving average ribbon that I'm using. And then, so the first thing I often do when I look at the charts, whenever there's been a big downtrend or a dump, is I'll look at the money flow, and I'm like, okay, so this has been going down for a while, and I'll check different time frames. This one's not a good example. Here's a really good example. Really good example. Okay, so on the 2 hour on this one, because this is indeed the bottom of this dip, and right, when you have the price come down and the money flow go up, eventually you're going to have a final crossover of this fast MA. Now, it's better when the money flow goes really deep, and then it comes up and gives you another hump, another like hump down. And I'm going to show you how to avoid these false entries as well. So before I do all that, I want to explain a couple things real quick. So with your your SMA or your moving average ribbon, you can use EMAs. Obviously when it's bullish, like your eight's going to be on top, and your 200 is going to be on the bottom. And then when you're bearish, obviously, your 200 is going to be on the top, and your 8, the one that's closest to the candles, is going to be on the bottom. Now what happens is that these moving averages become support and resistance, and they move, and they're dynamic. They just kind of go with the flow of the money or with the price. And the steeper the curve of the moving average, the more the less likely it is for price to break through it. What needs to happen is that the 200 needs to kind of start to level out. And you'll notice as you get going down, like in a strong downtrend, the price will eventually get further away from the 200. And what that does is it gives the price time to go sideways before the 200 just comes along and pushes it down again as a resistance. And what happens is, when this starts to happen towards the bottom, and as the moving averages start to kind of contract a little bit, and the curvature of the 200 and the other ones kind of level out, they can get kind of prepared to kind of curve up the other way. And what I theorize is happening here is people are wanting to buy on spot, and they're looking, is this the bottom? Is this the bottom? And they're wanting to buy, and when it gets way down there, they're like trying to buy in. But all these moving averages become strong resistance. They're just different layers of resistance that just push the price down as it gets down real far. And at a certain point, the money's like coming in. I don't know if this is trading volume. I don't know what data this supposed money flow is based on, but there's pressure built up, and you see this basically explosiveness that occurs. And it's because I think a bunch of people buy in, and you have a divergence, like with the money line middle band. And eventually, it's just, there's so much pressure, the delayed response of this divergence eventually plays out in a massive way. Excuse me. So there are a lot of different ways, like, to make sure you don't get on a false pump. You'll notice how, like, this case with the 8 and the 13 SMA, generally the 8 stays below the 13 until it's getting ready to have at least a little pump. But you don't want to enter a swing trade when the 200 is too far away. Like if the 200's way up there and the price is down here, you don't want to enter. You want to wait till it starts to get closer. It's far here, not as far here. It's even closer here. And what's happening is it's starting to contract a little bit over time, and the 200's starting to level out. So when you see this, you still want to wait a little bit, and you're going to start to see the flipping of all the moving averages in the ribbon. Now this isn't the best example, but in some cases, like, and it's really important what this 50 is doing. You'll have a little pump, but it won't hold above one of the moving averages, and it comes down. But you want to watch for other things like, okay, there's a dragonfly doji. You got a double bottom, really a triple bottom. You'll have other things happening, like something like this, I guess. This one, I guess, would be a demand zone. So you'll start to notice stuff like this as it bottoms out. In this case, you also had, well, I guess, yeah, here you kind of did. You had a change of character or market structure. I'll show you other ones that'll be a better example, but you'll have this happen where all of a sudden, like, it'll start to go up, and you'll start to get a little bit of a higher high, maybe higher than this one, and then a higher low. And so, even if you get in a little late, it doesn't really matter that much. If the price is staying above like the 8, and then, gradually it stays above the other moving averages, and the moving averages spread apart, showing a lot of strength and momentum. So let's look at something else, and I'll show you just how consistent this is. It could be on any coin, really. You want to look at different time frames, because it'll appear more and more. Like, you might see something that's a little weird, and then when you go to the correct time frame, then you'll see it. And this one's on the 1 hour. I remember looking at this one before. This one's a great example on PopCat on the 1 hour, and this happened. Oh yeah, happened to be the bottom of this trend change, and a big pump coming in for a great swing trade. So you had the price coming down and the money flow going up, and then on the final hump as it approached this 50 line, what did you get? You got like a hammer candle, a nice hammer candle. Your moving average ribbon started to flip, and it gradually got above more moving averages, and then you had your pump to Moon City or whatever. So I'll just show you how consistent this is with different tokens. Like on this one, I think I was looking at the 4 hour. No, 12 or something like that. See, here you go. When you look at a different time frame, you see it. It pops right out at you. So whenever there's a downtrend, I start looking at the money flow. I'm like, when is this going to be over with? Well, I know where the bottom was going to be because of this strategy. You had these two humps here, the divergence with the money flow, and then you had this one crossover right here, right there. And so you see, like, if you would have entered on one of these shark fins, it would have been too early. But you had the shark fin, so you knew it was going to go up. But instead of just entering when the shark fin comes up, wait for the price to close a candle above the 8 SMA. And then when that happens, it's confirmed. You could have entered like here, somewhere here. Like even here, you also had your market, or I'm sorry, you had like a demand zone kind of, and it came down and wicked and tapped it. And right there, right there on that wick somewhere could have been where you were starting to look for an entry. And then you had this, and boom, you're going to Pump City. Um, and this works with even tokens like I hate H bar because it's so hard to trade. It doesn't react to TA right. But like you can trade it to an extent. Let's see on another time frame what it looks like. So I was looking at this one before. No, daily. This is great for high time frames. There it is. So yeah, that's it. You got your money flow coming up, your price is coming down, like it's at an angle. You got your crossover right here. Your fast MA, RSI line, whatever you want to call that white line. It made the cross over the sentiment line from bearish sentiment to bullish. Yeah, and it's about pretty close to that time, when that nice looking shark fin closed. But you really get a confirmation once you cross this and you start popping above these MAs. And look at that. I mean, it was a bullish engulfing candle. And boom. Gosh, there's so many. And you know why I'm focusing on bullish scenarios with this, because if it was bearish, you can only go down like 100% till zero, but if it's bullish, you can go up hundreds of percent, 100, 200, 300, 400, 500, like no joke. Bullish scenario can be way more profitable. You don't get as many trades. You may see big swing trades like this a couple times for each token per bull run, more on lower time frames like the hourly, 30-minute or whatever. But the lower the time frame, the smaller the move's going to be. And in this case, this one went up like 570%. And so how did I see it happening? The money flow was deep, and then it started coming up as the price was coming down. And like this one here, this is important. You might say, oh, the money flow's coming up, but the price went down and it popped above. Yeah, you could have got a little trade here. But why you don't want to hold that as a swing trade? Why is that? Because the price is so far away from the 200. The 200 still at a sharp angle. It's going to be really super strong resistance, putting pressure, downward pressure on the price. And it takes time for the 200 to kind of level out, and for like all of the moving averages to kind of get more compressed or contracted. So yeah, this is a great way to find bottoms. I mean, to find when you need to start looking for your entry for a bottom on a long-term swing trade. And like, say I check this one and I'm like, well, I don't see anything. Just change the time frame to something else and keep looking. And here's one. There's a couple like this one. I kind of like pull this up to kind of exaggerate the price movement. And you got a very slight, dip in price, and then you have a very strong money flow divergence. And then you have, of course, you got your candle patterns. You got your hammer candle. And then you have this guy here, the fast MA crossing the sentiment line for the final time. And especially when you know that this last hump is really close to the 50 line and the price hasn't went up yet, you're going to have a massive move. And that's exactly what happens. Sometimes you'll get these big dips and it'll try, but it's like, no, it's still got all this buy pressure. And like on this one here, this one's pretty simple. Whoops. So like you had your, money flow coming up kind of sharp, price went down. And then what did you get? You got this big move. It was the start of that big move. That was the bottom. That was the lowest spot on that. This is so consistent. You just, you can't really deny that this is happening. I think it should be considered, and maybe if you watch this video and you have comments, place your comments or talk to me in the Discord, and maybe we can refine this to, with trying different moving averages or something, or but if you want to share, if you're thankful that you found this and you want to share a strategy with me, that'd be great, because I'm still learning a lot. I'm not like some pro trader, but I just kind of trade like when I have time, when I'm not working, because I have a lawn care business. But I think I'm going to trade full time soon. I think I'm about ready. But back to the strategy here, you got the price down, the money flow coming up, and this is on the 4 hour on graphene or whatever. But this is a good example of how you're waiting for the 200 to get closer, because it just, you need a lot of flippages of the moving average to give it a lot of support to be able to push through that hard resistance of the 200. Like here, you had the money flow coming up and the price kind of went down a little. It's kind of level, but it wasn't strong enough because it was coming down so fast, like, and it was so far, like, but here it's getting closer. And that's how you identify where you get the swing entry. And this, this is coming up again right now. This, I would expect this to be bullish. And there's some of these that are happening now that are just starting to play out. And here's another one, chill guy. I really like this one. That's not a good time frame. 12 hour, perfect. So there it is. There's the strategy. You're going to catch the bottom. You don't wait for this to cross into the green. That's way too late. You're just waiting for this this guy right here, the white fast MA, cross the middle band on the money flow, and that's it. And the deeper the red and the longer it stays in the red before it pops, the stronger it's going to be. And like this here could still be playing out. It could come down and then go back up again. I mean, it hasn't even really bounced on the 200 yet. And this is so consistent. I could just show these like all day. That one's not a good example because it's just not a big move. Here's one over here. I wonder what time frame this was. AR. No, it must have been a different time frame that I was looking at when I seen it. Yeah, it's at 12 hour. I guess will work. So just check different time frames, and you'll see the money flow coming up once again, and then bam-o, there's your bottom. There's your ribbon flip, and you cross the 200. And then you're off to the races. So that's that. I hope you enjoyed this. I could go on and on with this. Look at the charts for yourself. Do a little back testing. Check different time frames, higher time frames. These are for swing trades. And yeah, I hope it works for you. It's been working for me. I just kind of like started with smaller amounts of money, because I was stressed when I put too much money in, and I just use smaller amounts and low leverage and just put it in when I see this happen and just forget about it, and days later or a week later or a month later, then, my little bit of money grew. And so, yeah, when I got in the community, I noticed that people would say, oh, you have to develop your own trading strategy that works for you. And I just kind of stuck to the teachings and the videos that Seth showed. But like I started to kind of adapt eventually and figure out how I could do something of my own, because I started doing a lot of back testing and seeing things and taking notice of stuff like this. So yeah, I hope it works for you. And yeah, that's that. Have a great day.